Jordan says, "Hey Robert and Austin, I love the podcast and I look forward to the new episodes every single week. My name is Jordan, I'm 22 years old, and I'm currently financing a vehicle at 6.9% APR. I'm currently considering trading in this car and leasing a new one. Here's the breakdown. I have a 2020 Tesla Model 3 with about 71,000 miles on it, and I owe a little bit over 15,300 on it through this financing, paying about $500 a month. I can trade this in, begin a 2-year lease, and pay $2,100 upfront, which includes the first month's payment, and then pay $388 a month for the next 2 years. I just finished up my master's degree in education. I have no student loan debt, but I do have this $15,300 loan weighing me down. Obviously, I would lose the equity trading this in and leasing a new vehicle, but I believe leasing a new vehicle would offset that loss and save me thousands over the next 2 years. What do you guys think? Your thoughts and opinions are much appreciated." Robert, I'll let you kick this one off.
So yeah, here's my thought. And this is a good question for many of you. I have a rule of thumb. If you want to get something new and you're going to drive it till the wheels fall off, buy it. Otherwise, never buy a new car. You should always lease. That's my opinion. The numbers make sense to me. I get a new lease every 2 or 3 years because I don't want to deal with maintenance. I don't want to deal with repairs. And I want to make sure I have a nice car that is safe at all times. But to answer your question, you have to look at it this way. I don't think you're giving up much equity in this vehicle at $15,300 because of the fact that they're going for $15,000, $16,000, $17,000 on the market. So I think that's negligible and not something I'd be too concerned with. I would be concerned with the actual numbers. How much are you really saving? And are you doing this because you want to save the $150 a month? Or are you doing it because you want to have a newer car, lower miles, and get a better model of, I'm assuming, another Tesla? It doesn't clarify in the question. But that's the way I look at it is, why are you doing this? I don't think you're doing it just to save the $150 because I don't see that where that's going to move the needle much for you. But if you're doing it as a combination of the monthly savings, having a newer vehicle, and having this lower priced lease, then that I think is a good idea.
What's your take, Zaid?
Yeah, actually, I thought about doing something similar myself. I actually have a 2021 Tesla Model Y that I bought used last year. I was thinking about getting another Tesla for my wife. You see all these deals advertised by Tesla for their leases, and it sounds really nice, right? $299 a month or something along those lines. I agree with Robert. You know, I think if the goal is to get a new car because the 2020 Model Y or the Model 3 that Jordan has doesn't do it for him anymore, okay, I understand that part. But otherwise, I think it's hard to recommend, in my opinion.
I'm always someone who I just want to make sure people understand that, like, when you lease a vehicle, you're essentially renting it. And you're renting it for $388 a month over this 2-year period of time, where I'm assuming at this $500 a month, you should have this car paid off in the next 3 years. So it's like, I have a lower payment for the next 2 years, and then I guess you're going to take on another lease after that. Maybe the payment stays the same. So now 3 years go by, and yeah, you're probably driving a 2025 or a 2026, but you just have these, payments in perpetuity. Or you just spend 3 years of your life paying off, call it 7% interest rate debt, which is in that range where it's yeah, you could pay that off. I'm not mad at you for paying off 7%. Now, if it was 4% or 3%, I would be mad. I'd say keep it around. But it's one of those things where it's okay, fast forward 3 years, you have a paid for Tesla Model 3 with maybe 100,000 miles on it. That's probably worth I don't know, 10 to 12K, but you don't have a monthly payment and you have a vehicle now versus fast forward 3 years, you still have a monthly payment of 388, 450. Who knows what that next lease is going to turn into. I don't know. For me, it's always so hard because I think the best way to build wealth is to find margin in your budget. And you find margin in your budget by saying no to high interest debt and by paying off debt that you've just kind of had over a long period of time, right? When it comes to student loans, if it's a low interest rate, you keep it around until it's all paid off. It's a high interest rate, you pay it off. We always say you can't outinvest high interest debt. And so in this situation, what happens in 3 years from now when you have this $500 a month freed up? You could invest that $500 a month versus in a situation in 3 years from now where you're leasing, maybe your lease is $500 and you consistently have this payment. So I'm going to say keep the Tesla, pay it off over the next 3 years, and then start investing that $500 a month every month for the rest of your life. And when you do need a new car, do what Zaid did, which is go buy a used Tesla Model Y or something. I think he said with the tax credit. Before this episode, we were talking about it, and he said after the tax credit, his Model Y was $21,000.
That's right.
Save up for that. Go buy it, assuming interest rates are 7, 8, 9, 10%, right? So I don't know. I'm just a big believer that the only way you build wealth is by investing money, and you find money by finding that margin, and margin normally comes from paying off unnecessary debt.
All right, I'm going to unpack this just a little bit further. And I love this question because, Austin, you and I always differ on it, and that's what makes this podcast so good. We always say personal finance is personal, and this exact question is personal. So let me give you a reference. My personal driver is always a new lease. I don't want to mess with things. I don't want to have to deal with it. I don't want to have any issues. So I look at that payment as a cost of doing business, as a cost of life. My cool vehicles are always bought used, and my company vehicles, you guys would get great joy. My construction company in Ohio, at one point, I had 5 of the same vehicle. They were 1998 to 2005 Chevy Silverados. Now, since then, I've sold 3 of them, but I still have 2. And so it's always situational here when looking at this. And I agree with Austin 100%. But let's put a little bit of one last wrinkle into this. If you're a lawyer, if you're a doctor, if you're a salesperson that drives all the time, if you're a realtor, someone that has to take people in their vehicle all the time, you don't want to have an older ratty vehicle with 100,000 miles on it, because then they may frown on that and look at it like, well, if this person's successful in their own field, why don't they have a slightly nicer car? So that is why with all things personal finance, it's up to your situation. I think either way is a good way to do it.
And I will end it with, they said they just finished up their master's in education. So I'm assuming this is a teacher, which means you're probably making 45 to 65K, and you're not a lawyer or one of those things. So with that information, do you think they should still lease?
If we're specifically speaking to Jordan and not the other 100,000 people that are going to see this episode, then yes, I would keep the Tesla. But for other people, that's why I said 100% agree with you. But with everyone else listening, I want to make sure people understand. We're not telling you not to have a nice car. We're telling you that there's a time and a place, and do you need it?